Hi everyone, welcome to my next video. This is an update regarding a video I did about 3 months ago, and the title was My Secret to Paying Off a Mortgage Fast, or faster rather. I don't recall exactly what I said there, but this is pretty astounding. And my reason for doing this update is this October 2025, October 1st, will be 1 year since I started doing this process, and 1 year since I refinanced my cabin. And what I'm about to show you is absolutely incredibly great. And I try to be as helpful as I can, and I encourage anyone, either with a mortgage already, or if you're considering making a purchase, land, a house, a condo, whatever, please understand the mortgage process and how mortgage payments work before you sign those documents, because I noticed a lot of you in the comments did not understand exactly how it's all broken down when you make that payment. And I didn't years ago. I would just make my payment and assume the bank knew what they were doing, which they do very well. And I was just doing what was expected. Well, I've owned many homes throughout my life and never really gave it much thought until last year. And the reason I started thinking more clearly about it and in more detail was because of my age. And as I near the age of 70, I started thinking more about taking on this debt and all that interest, because I took out a $75,000 loan with 7.2 interest rate, with a 30-year fixed, and with a $450 estimated interest payment every single month. And I didn't like that interest payment. I didn't like it at all. But that's what banks are in business for, to keep you paying that payment every month so that they can make money off that interest payment. And I suddenly, for some reason, as I was driving home from closing a year ago today, actually it was almost a year ago today, I suddenly realized that there was a better way to pay my mortgage. And here's what I did. When I closed on my refinance, mid-September, my first payment was not due until November 1st. Well, I thought, why wait until November 1st? I'll just make a payment in October. So I did. Well, that payment pushed out my due date to December 1st. So I thought, well, that's pretty cool. Now, my payment was only $700 each month, including principal, taxes, and interest. But I wanted to pay more because I'm living below my means, and I decided to pay $1,000 every month on my mortgage, regardless. So I made a payment. Actually, I made a payment of principal only right out of the gate on October 1st, which immediately reduced my principal balance due to $74,000. So in November, I made a regular payment, which was due, and the next due date was December 1st. But I realized that if I made an additional payment in November, it would push that due date out another month. And I learned that if I alternate months and continue to push the due date out, I can make a principal-only payment every other month. Now, please know that when you make a principal-only payment, your interest for that month will still accumulate. And I decided that by making an extra regular payment here and there every few months that would go towards my accumulating interest. And I hope this makes sense to you. It's really not complicated. And please go back to my video entitled My Secret to Paying Off a Mortgage Faster. And I also do a follow-up with more detail a few days later. Now, some of you were doubting me and saying, well, that doesn't work, Barbara. You have to make a payment every month. Well, of course you do. And never, ever miss a payment. Whether it's principal only, when your payment is not due, or a regular payment when your payment is due, you will always stay current. And you must always stay current with your lender. Now, here's where I'm at exactly 1 year later. And it's going to really astound you because it's shocking to me. I'm a think out of the box kind of person anyway. And I just want to say this. Please do not go to your bank expecting them to help you figure this out, because they don't want you to do this. They don't want you to do this because they're losing money on that interest if you really, really understand how your mortgage payment works. They want you to continue to just making those regular payments and keep you enslaved for all those years. Because if I just made my regular payments to finally reach my principal balance, which I have now, which is $65,900 from the $75,000 original loan amount a year ago, it would have taken me until the year 2033 to reach that principal balance. And I would have been paying approximately $450 in interest in all those months. And by skipping over all of those months to reach the balance that I have now, I took $450 for the months that I did not pay, and I timed it. Timed it. Sound like a kid. I multiplied it by 8 years, and oh my gosh, where did it go? I think it's $36,000 I saved. Now, that may seem like a lot of money, and it is. But when you pay it month to month, you don't realize how much money you're giving to the bank, because it's a little here and it's a little there, and it's part of your payment. And I think the banks don't want us to realize what we're losing by doing that. Now, if you have watched my previous videos and you're still doubting me or you don't understand it, please go to a financial professional and ask for them to look at your own particular mortgage loan documents and perhaps even watch my videos together, because I have saved $9,000 in just 1 year of doing this. And instead of paying the bank $36,000 in interest, which would have slowed me down in chipping away that principal balance, since every single regular payment goes mostly towards interest when you first take out a loan, it would have taken me 8 years to reach a balance of $65,900, and I did it in 1 year. Now, obviously, going forward, the following year is going to be even more dramatic, because as I continue with this process of pushing that due date out and making a principal-only payment on the months where a payment is not due, I am going to blast through this principal balance and pay my loan off. I'm going to try to do it in 4 years. It might be 5, but I'm going to try to do it in 4. And I'm going to do an update exactly a year from now, today, and tell you where I'm at. And I plan to be at least $10,000 more on my principal balance, which should take me down to 64,000. No, 54,000. Oh my gosh. And I'm even thinking with my YouTube money, I do have to pay taxes on it. And so I'm keeping all of my earnings separately because I don't know how much I'll have to pay next spring. I'm pretty sure it's high because here in the US, I believe it's 30%. So I'm ready to, I'm prepared to pay back a good portion of that. But I think what I might do is take the remaining balance and put it towards my mortgage. And if I'm ever in a position to buy my animal sanctuary, which is my dream, I'll be able to sell this place and buy that animal sanctuary a whole lot faster. And that might be a quicker way to do it, rather than just keeping my YouTube earnings in a separate account and continue to chip away at my mortgage. I'm not sure yet what I'm going to do. I kind of like the idea of having my YouTube earnings separate, but I also like the idea of chipping away at this mortgage and then being able to sell this place if I ever decide to buy land and live on it for my animal sanctuary. So that's kind of up in the air, but that's an option because my YouTube channel is doing so well, and that is my life dream, to have an animal sanctuary. Not a shelter, but to buy land and acreage, to donate for conservation, and to leave it in its natural state, and to give it some sort of a witty name, and allow all of the wild animals to be able to remain there and live in their natural habitat for as long as the earth exists. And that is my lifelong wish. So that is to be formulated, but those are my two options. So the key to this is to continue to keep that due date pushed out. Now, I cannot personalize suggestions for you. And some of you did ask me in those previous videos, could I give you more detail in terms of your own situation? And I am not qualified to do that. However, I suggest you go to a professional and tell them that you are trying to make principal-only payments and push that due date out so that you can make those principal-only payments on the months when a payment is not yet due, and that is the key. Never make a principal-only payment when your payment is due, because you need to fulfill those, if you have property taxes and your insurance as part of it, because you need to fulfill those, and it's crucial that you do that. And it's crucial that you maintain your present status with your lender. Never get behind, no matter what. And sure, you may not be able to pay extra, but here's what I want to really stress. Find a way to do it. Skip those dinners out, or don't buy that extra outfit. Or better yet, do this on your car note. Because the less interest you pay, the faster you'll get ahead. And if you can pay off that car note with this method, or even your credit cards, that will free up those payments to put it towards your mortgage. And I'm happy to answer general questions, But please know that this method is working very, very well for me. I'm not going to share my amortization table or my personal loan lender or any of that. But this is really astounding that my principal balance is now what it would be in year 2033 had I just been making regular payments. And I would have been making all of those interest payments, which would have taken me all that time to get where I am right now after only a year. So I hope this made sense. I really love to be helpful, and I just thought of this a year ago. And if I can do this, anybody can, because I'm not even that great with math. But I took the time to think about my mortgage, and I took the time to study my amortization table. And if you don't have one, call your lender, and they can certainly give you one. But don't tell them why you're asking them for it. And I can pretty well guarantee that if you do mention this method, they will probably say, gee, I've never thought of that, or I don't know anything about it, or even you can't do that. But as long as you don't have a prepayment penalty clause in your loan, which I believe no loans are able to do so nowadays, there's no reason why you can't. You're not doing anything that's in conflict with your lender, and all you're doing is being creative and paying off your loan the best way that you can. So I hope this helped you. Please feel free to ask me questions, and please refer back to my previous 2 videos from about 3 or 4 months ago. My secret to paying off a mortgage faster, and then I did an update, which was my secret to paying off my mortgage faster update. And I really tried to go into detail to cover a lot of your questions in that second one. And I really try to explain this as clearly as I can. So I hope you're all having a great day, and I want you all to live your best life and not be held hostage to a loan that's going to hold you back for years and years and years, and to free yourself from all of this debt, if there's a better way to do it, which I have found. And please let me know if you're already doing this. I would love to hear. Some of you thanked me because you're doing it now, and that is absolutely thrilling. I'm so thrilled that you were able to understand my method, and that you've really taken control of your finances. And so with that, I hope you're all having a really great day. Take care, everyone.